You're watching us here on Chartbusters. As promised, let's go across to the management of VA Tech Wabag. Mr. Chopra is joining in. Now, the company reported a decline of 12.5% on their top line. The operational performance saw a sharp improvement. So the margins actually came in closer to 12% versus 5%. And as a result of which, the net profit was higher by 65% as well. The important part, what's the way ahead? Thanks a lot for joining in, Mr. Chopra. And that really is the big question. You alluded to your revenues being lower because of your strategic focus on EPC business and some weakness in Europe. And as a result of which, we've seen improvement in your margins as well. The question is, does this sustain? What's your outlook from a revenue and margin standpoint for this year?
Good morning, Nigel. Mangalam.
Go ahead, sir.
I think what you pointed out is, a small dip as far as revenue is concerned. I think we have been talking about it for last almost 1 year, that there has been a strategic shift from EPC, pure EPC to, bringing a lot of EP business into it. So the decline you see in this particular quarter has mainly three components. One, that we have divested a couple of entities in Europe. Secondly, in this particular quarter, our focus was more on EP business, especially our Russia order, which has the traction has started again because of all the logistics issues behind us. And going forward, if you look at our order backlog, we have around 8,000 crore of APC and around 4,000 crore plus of O&M. So I think going forward, definitely there is going to be an increase in the revenue, especially once our two major contracts. One is a 400 MLD desalination plant in Chennai. The other one is a 800 crore order of an STP in Bangladesh, which are EPC. So definitely the C component also comes into play, and you will, going forward, you will find that, the revenue growth will also come in this particular financial year. Regarding the margins, I think, sorry.
Yes, please go ahead.
Regarding the margins, as far as this thing, if you see, we are already into a double-digit EBITDA margins, and that would be our endeavor, because the focus with the right mix of design engineering procurement orders and EPC orders and a substantial growth coming from our huge order backlog of 4,000 crores of O&M will ensure that we are able to focus on our bottom line, and healthy margins are maintained in a double digits.
All right. Hi, Mr. Chopra. So we get that. Focus on margins. It's in double digits. You're looking at maintaining that. But give us some more concrete numbers. On the revenue growth, you just mentioned that, yes, there will be growth as you start executing these large projects. In the past quarter, it was up only around 1%, your standalone business, that is. Could you tell us what kind of a revenue growth are we looking at for the year? I'll tell you why. Because some part of the street is fearing it could be a flattish year in revenues, or maybe some are saying maybe it could be a degrowth. Wanted to clarify on that growth. What kind of growth are we looking at? And also order inflow for the quarter was around 730 crores, with India at around 500 crores. But those big, larger orders are not coming in. The Chennai project was the last one. Is there a slowdown in order inflow?
Okay, so we have asked too many questions in one question. So I will start with the last part, which you said about order intake.
Yes.
Now we have done, as you have seen, we have executed around 550 crores and our order intake is more than 700 crores. Now, if I look at the order pipeline, as far as order pipeline is concerned, I think we are well placed on around 1,500 crore worth of orders. And we are actively pursuing bids which are to the tune of around 5,000 to 6,000 crores. Now, going forward, we find that we will have a healthy mix of orders, which will be more on high technology like desalination, recycle, reuse. And the shift will be, the spread will be between India and overseas. We expect almost 50% share coming from overseas and India, so that we are able to maintain a good, healthy cash flows as well as, improve our margins with overseas EP orders. Also, we are focusing on Russia, where we are executing a large project, and we see a couple of opportunities. All we are trying to ensure there is that our payments are secure. It's all against LCs, which are acceptable to our bankers. Now, as far as revenue visibility is concerned, I think Post-COVID, we have not been giving any further guidance on this thing. But all I can say right now is that definitely there is no question of fear, because we have to execute the current order backlog plus the new orders which are expected in a span of 2 to 3 years. So an average of 24 months to 36 months, we have to execute all these orders plus a huge order backlog of O&M. So there is no reason we will not be seeing an appreciable growth as far as revenue is concerned in the current fiscal year. And if I look at my order backlog or expected, I think our endeavor will be to have more order intake compared to what we execute this year, so that in FY24 end, our order backlog will be even stronger, which will give us a visibility not just for the current year, but for the years going forward.
All right. So there is confidence and optimism in the way going ahead. You will post a revenue growth in this year, and you are on track to get more orders this year. So as to, you can take your order book to the earlier spoken number of 17,000 crores by the end of next fiscal itself. Just a couple of more details before we let you go. Mr. Chopra, in the order book, you've alluded to 8,000 crores coming in from EPC. How much is EP and how much is EPC of that? That's point number one. And secondly, if you could give us a sense on, what's the arbitration and how things stand with each litigant. There is Abgenco, there's TechPro, there are various litigations. What's the recovery hope here?
See, since we have already provided for all that in the last fiscal year, so it does not reflect in our books. Yes, the litigation is going on, and it's very difficult to comment on when it will be done. But as and when the litigation moves forward, we'll come back to you with the latest status. And if there is, once the recovery happens, definitely it's going to be a right back, in our books. But we have already provided for all Gencos, which was a major receivable reflecting in our.
Okay, all right, Mr. Chopra. Thanks so much for stopping by and giving us all of those details. Wishing you all the best for the remainder of this year. And we look forward to touching base sometime during this quarter yet again. For the time being, a short break. Come back, continue our focus on markets and stock-specific action.